I'd say the market is still pretty young. And one thing I think about oftentimes is like, at least when I used to do like, I don't know, more liquid stuff or trade on my own, am I going too deep into this analysis? Like, for example, trying to do sum of parts in crypto is pretty pointless right now because like nobody thinks that deeply. I feel like most coins basically trade on like short-term narratives that might not even always be like fundamentally sound.
Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. Follow and reach out to Chaos Labs on X to learn more.
What's up, guys? Just want to tell you a little bit more about Fuel Labs and their new Ethereum L2 Fuel Ignition. So Fuel Labs is launching Fuel Ignition, a high-performance ETH L2 powered by their Fuel VM. With the launch of Ignition, the team is also launching Phase 2 for their Fuel Points program to reward users and promote growth. Make sure to check out fuel.network to learn more. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Ryan Connor from the Blockworks research team, as well as Brick from Entropy and Jose from Spartan. Thanks for coming on.
It's a pleasure.
Brick, they should be familiar with you, but Jose, maybe you want to give a little background on yourself, and then Brick, you can also talk a bit about Entropy as well.
Absolutely, yeah. I can go first. So let me start with the background of Spartan, and then I can introduce myself. So Spartan is broadly composed of three main pillars. First, the fundamental-driven hedge fund, where we take long-term views and also catalyst-driven trades in altcoins that we're bullish on, and this is basically where I spend my time on. Secondly, there's the venture arm with two funds focused on DeFi and infra, and the other one focused on gaming. And lastly is like our advisory team that handles M&A, fundraising, and tokenomics design. For myself, I got into crypto during college while I was on an international exchange in the US around 2021 when crypto was going parabolic. Started like error farming, flipping NFTs, mainly to cover like these expenses that I was having on the exchange. And yeah, it was like my way of earning something extra in crypto. And I guess what drew me to work in this space is actually like I really like the meritocracy of it from a double perspective. First, because there is a lot of alpha, and if you work and spend time on it, you can like discover these so-called undervalued tokens, either by reading a lot of governance proposals, looking at dashboards, or creating ones yourself if you know how to program with Dune SQL. There are like a lot of marketing efficiencies, and that's opportunity. And the second aspect is that if you basically like spend a lot of time and you want to work in the space, you can just get out there, start delivering actual insights, and you will get recognized. And that's basically what got me into Spartan and have been in the fund for 1 year and a half. And yeah, mainly focusing on liquid markets. And I remember meeting Brick on Twitter back in the days when I was doing the first interviews, and he started doing them also at Blockworks, and now here we are.
Fantastic. Yeah, I completely agree with you on the meritocracy thing. I think it's quite underrated about crypto is you can do stuff. Like you can just do stuff and people will notice, and you can make money because it's very inefficient.
Yeah.
Brkovic.
I'm here for you. Going back to that beautiful moment, Jose, to be on the podcast, which one of the first people in the crypto industry I really like connected with. And yeah, as I said, I quickly joined Blockworks after that. Most probably know me who are listening to this podcast like through that. But recently transferred over to Entropy. We're basically, if you want to put it in TradFi terms, a consulting firm or akin to a consulting firm. We're currently in an exclusive deal with Arbitrum, trying to make the DAO more efficient, basically writing governance proposals, trying to align key stakeholders, doing all of that good stuff. We've been in the deal for 2 months now. Things are going really well. A lot of interesting stuff going on that front. Thanks for inviting me on this podcast, guys.
Thanks for coming on. I think I want to talk about Arbitrum, and then we'll also talk about Unichain. We talked about it a bit before we started to our listeners, but to get started, the main reason that I wanted to have both of you guys on, as well as Ryan Connor, is I traded basically exclusively on narratives, as well as some, I guess, like fundamental stuff. But as far as I've seen both on your Twitter, like Brick, I knew you. I don't really know you that well anymore, but when I did know you, and Ryan Connor as well, big cash flow guy. How much do you think fundamentals matter within crypto? Ryan left. He doesn't like talking about this topic, but maybe we can start off with Brick.
Yeah, I mean, he's clearly the big boss now. If he can just like leave the podcast, come back in when he wants to, huh? But yeah, I think fundamentals really matter, but I'd say the market is still pretty young. And one thing I think about oftentimes is like, at least when I used to do like, I don't know, more liquid stuff or trade on my own, now I'm just a, full-time entropy guy. Don't really have time to trade that much anyway. Like one thing I always thought about is like, am I going too deep into this analysis? Like, for example, trying to do sum of parts in crypto is pretty pointless right now because like nobody thinks that deeply. Another example would be people don't think far enough in the future. Like I feel like most coins basically trade on like short-term narratives that might not even always be like fundamentally sound. And like cash flow to token holders isn't really a thing. It's more about, is this protocol making a lot of fees or revenue, even though there's no clear way to like actually earn those fees as a token holder. Like the value flow can go somewhere completely else. But the main thing that like I feel like a lot of coins trade on are like those high level numbers, and the industry is still in a point where like a lot of people disagree on like even the basics, like what's the P&L or what's the income of like an L1, or can you even build that for an L1, and like what are what are operating costs for this L2? I don't know, I'm kind of yapping here, but I guess my point is that there's like no standardized way or well adapted way yet to like value a lot of these things, as well as then people don't look into the future like far enough, in my opinion, which then makes the like investing scheme completely different from TradFi. Well, you have like funds that start like, they talk with the C Corp. They're trying to figure out like, especially in more stable industries, like, oh, what's going to happen to like this company in like 6 years or 7 years out in the future. And here it's more about like, oh, what's going to happen today? What's going to be the big narrative? That's my 2 cents, I guess.
I totally agree. I think we or the space has to agree on those things, but it's also like where the space is going. I think it may not be trading on fundamentals now, but it will be increasingly trading on. We're seeing that right now in two things. It's like sell side and buy side. Sell side is getting better. Fundamental based coverage here, Blockworks obviously. So we are seeing like this growing number of research companies and data providers, Dune Analytics, DeFi Llama, Kaido, Blockworks research dashboards on Celestia, Solana, and all of that. And then on the buy side, I think if you think like crypto is growing 10x, then the incremental buyer is likely to be a liquid fund, which is more of like an institutional player training fundamental based approach, right? Yeah, and actually there's like this new thing that I don't know if you guys know BitClub, but Jason from Folios released it a few months ago, and it's where kind of a value investors club where analysts and liquid guys share investment thesis. They share the frameworks, and many people there can play devil's advocate into asking questions and kind of contesting some thesis, and it's pretty cool. And again, yeah, the space may not be fundamental based right now, but it will be, and it will be increasingly be more. But again, like not ivory tower, like you have to be crypto native. I'm a DGen at heart, and for me, fundamentals like aren't always revenue, even cash flows to token holders. I think that's like kind of a limited way of seeing it. Fundamentals are like what's important for the market right now and what the market is tracking for a specific protocol. You briefly mentioned it, but even for per taxes, rather than cash flow return to token holders, like most people just focus on pure raw volume or volume based market shares. Why? Because it's like easily accessible on DeFi Llama. Because DeFi Llama right now it's pretty much like the only agreed data provider side where most of the people look at if they want to buy a token or if they want to compare to like a basic relative valuation. Um, Same for lending protocols. If you look at historical correlations, they're mostly correlated on TVL and not really on volume on earnings. And why again? Because it's easy accessible on DeFi Llama. And yeah, and to briefly mention here, I actually think one of the main reasons why Solana has been doing great since last year is probably because of you guys at Blockwork Solana data, your good coverage, and also the fact that relative value trades historically have been performing good. ETH was kind of having troubles with the narrative. That was the opportunity for Solana. Solana found its way with the meme coins, and yeah, that's pretty much.
I guess two things I want to like kind of touch on that you talked about. First one would be, I mean, I want to be definitely clear on the fact that like value investing kind of still works, and I think a good example of that, not to glaze you too much, Jose, but like the across stuff you posted about on Twitter, it was across, right? Like
Yeah,
6 months ago or whatever, and like nobody was really paying attention to that. So that's just to me like you're thinking about that market vertical in a very fundamental way, and there's like no clear like kind of narrative right now that's like easy to market or was back in the day, and then suddenly like it's a good fundamentally good project, it starts like expanding a lot, and then the market like catches on to it. And I thought that was a really good example of like kind of how you should do liquid investing in crypto.
yeah. I to be honest, I got into the cross trade, if you can call it that, just by trying the products. Like I was bridging all the time, and I tried every bridge out there, and across was the fastest and the cheapest one. Then I got into like, why is this happening? Like, is there some trade-off in security out there? And it wasn't. It's just a good mechanism design. And then you start like talking to the team, you build a thesis, you see kind of where the space is going, um, and you build like a growth story, right? Yeah.
Yeah, and then the second part, I guess this goes out to the Blockworks panel. How do you feel about like the whole Solana stuff with, especially I think what the market is now kind of attaching itself to is purely what you guys call, I guess, real economic value, which is basically like transaction fees plus then MEV tips or
Mm.
GDO tips. And if you look at, for example, Ethereum, like the chart is, if you map it out in the previous cycle, like the charts are pretty much following each other, right? Where like the fees explode kind of in the bull market and then they just like immediately drop. So I guess what I'm asking is like, where do you see Solana's future? Because like what happens if meme coin trading basically leaves the chain? What's the next thing that can like uphold the narrative?
Apart from meme coins leaving, my whole thing has been like these past few weeks. Solana gets really, really congested to the point that I don't like meme coins leaving might not be the issue, but I think like the big issue that it's going to face is congestion and just transactions consistently failing throughout the bull. I think that's like I don't think meme coins leave because it doesn't make a lot of sense. Like it's fast, the infrastructure is there, there's ecosystem around it. Like you can borrow on meme coins, you can even short new meme coins for like dumpy.fun and stuff. I think their main problem is not going to be meme coins leaving. It's going to be the fact that you can't use the chain. But at that point, do fundamentals or matter? Probably not. I think the narrative is going to be, oh, like so people are actually using Solana. That's why the chain is down, as opposed to Arbitrum or Polygon. You know, Ryan, you can give a more well-rounded and good answer.
Yeah, so I think just to kind of like piggyback on what you guys were saying earlier and how much fundamentals matter or don't matter. I think that they objectively matter. The question is always just how much. And I think if you want to explore that, you can kind of like look no further than the Sol ETH ratio over the past 12 months. Um, if we look at like this new measure of real economic value, or call it price to real economic value or price to sales, um, Solana started out the year trading somewhere around 50 times sales, whereas Ethereum was trading at somewhere around 300 times sales. And then that varies depending on your forward growth rate, right? But like ETH was clearly declining. Their growth in Rev is 93% or more off its highs, and the plan is to grow it less, right? And Solana was going in the precise opposite direction, right? Compounding on a year over year basis at like 1200%, something like that. You don't get setups like that in TradFi, but you had it in crypto. And like the Sol ETH pair expressed that valuation gap and those forward expectations. Now, like, does the market always do that? Like, no, right? Like there's a path dependency to crypto. We started trading like, you know, arbitrary like pieces of tokens on ledgers, and over time they made more money, and over time institutions came in and they started trading marginally based on those fundamentals. And like the conversations that we have with subs, um, everyone asks me what the valuations are. Everyone asks about fees. Everyone asks where you think the fees are going. I think some of the most well-known funds in the space, like they'll tell you, like we want to invest on a 12 to 24 month time horizon, and we do some narrative trading, but like fundamentals are always in the backdrop, right? So like, how does that change going forward with more institutions entering the space? Like, I think the answer is very obvious. Like you probably have a portion of crypto that always trades on like silly stuff, and that's fine. It's a permissionless thing. But like the capital is going to make these things look more like, stocks or bonds than crypto tokens over the long term. But things can stay silly for a long time. I think to answer Brick's question about like Solana fundamentals and meme coin trading, um, I think a good analyst will discount that activity to some degree in their forward estimates. I think that a good analyst will realize that Solana activity is going to fall 70% or greater in a bear market, but I don't see that being very different from any other chain. I think that historically, this is a very levered space. I think they all fall 70 to 90% in a bear market, as they have historically, as people get wiped out, as market makers blow up. Like it's the only ecosystem on the planet where you can do 100x trading, and people do it, and it impacts market positioning and price action. So um, I think a good analyst discounts those things, but with like the understanding that like, dude, it's everyone's going to blow up. Dan Smith at Blockworks is always pointing out that if you look at the top gas consumers on ETH, it's all meme coin trading too. It's like the Pepe pair, right? So I don't know. Solana is certainly winning with this meme coin activity, but like, does it matter a lot cross cycle? Like, I don't really think so.
Yeah, I guess what I'm getting at more is like, what's the future there? Like, I totally get why the valuation is up right now. By the way, you talked about the multiple, I guess similar to price to sales, price to real economic value. Like, has he expanded in this, um, like recent times, or has it kind of stayed stable with RIV growing?
Yeah, if you're gonna look at an easy way to calculate this is just to take the last 1 or 3 months and annualize it. If you just want to normalize for like zero growth across the board, and we're trading at a little over 100 times on Solana. ETH, depending on how you want to slice it, is like between 200 and 300 times on
Oh,
like
it's
a
still
trailing
high and
3 month
traded.
annualized. Yeah, the valuation gap is still there, right? Um, so
Well, that's the decentralized premium you get, huh?
correct. That's money premium. That's the centralization premium, Vitalik premium. I don't know what you want to call it, but it is an objective premium to Sol, but not to other chains, right? Like Arbitrum is trading without time boost on a trailing basis at like somewhere like 200 times, maybe like 150. I forget. SWI is trading at 2,000 times. Like now, like there's a growth story ahead of it, but like does SWI have more monetary premium than ETH? Like, I don't know. You tell me. You can't parse it from the data. Um, so big question mark.
For Brick, what you said, I guess like next steps for Solana apart from meme coins, I guess it's DePIN. No, Ryan, you are a big DePIN guy, but that's like the thing that's touted. I don't. I think it could be. I just feel like DePIN isn't a huge fee bringer. I'm not sure though. Ryan, maybe you're.
I mean, that's kind of what I'm saying here. Like, yeah, you can get activity on your network, but for example, deep in transactions, I don't think they really would produce that much value for like the network itself. And I think this is the trend that we're kind of going towards with everything. So like at the end of the day, like L1 tokens should be, I guess, valued more on like a utility basis or moneyness basis or whatever that like comp is there, which isn't an easy task to do. Like, again, someone would need to standardize that. But like where I'm getting at with this Solana stuff is that like right now everyone's super hyped about like all of these, especially like the MEV part of the fees like they're raking in. And like it's all just meme coin traders getting kind of screwed on the chain. And my thesis is that that will go away at some point. So like, do you see kind of the chain being able to compensate for that with something else, or will it more become like a similar narrative as it has become in the last 6 to 12 months, where it's like, yeah, we don't actually need like execution fees. We can do DA, even though I feel like that's a bad argument, or then like replace those fees with something else.
I will say one thing. Daniel Smith made a good point about this, and he said the token price doesn't have to be like high. And I think like instead of valuing these on utilities or whatever moneyness, the price just might go down because we keep valuing them as fees, but they actually make more and more sense. I agree with you though, Brick. It's like if your bull case is idiots will keep like slamming gas and paying priority fees to like get their transactions through, that's not particularly sustainable.
I
And
disagree.
also, just quickly to say, I gotta give a disclaimer here. I have nothing against Solana. Solana fanboys on Twitter, don't come after me. It's all bros. Yeah.
Jose, I would like to hear what you have to think and how Spartan thinks.
Yeah,
But
I was
yeah.
I always think people will find a way on gambling on chain. Like I think there's a circular trade of people wanting to do stuff on chain. If that's gambling, let it be it. Like if you look is sports betting revenue over the last 2 years, they've been growing like 2x every year. Stake suddenly became like this huge revenue generating company. It's private. We don't know the valuation really, but still like it's something that is happening. Even even like here's the AI agents thesis. Even if it's not like actual users on chain, maybe it's like AI agents using Solana blockchain as the payment rails for doing all of the AI interactions or I don't know, some weird stuff that maybe we are not thinking about yet. But it will happen. Like I'm pretty confident in that. What Solana or whatever blockchain may be, so the gas usage or whatever blockchain may be in the future will be very different from now, and but it will still be like execution fee driven. I think just different, I guess, other stuff.
Yeah, I think I mean, look, to Bakwa asking if DPINs are going to drive a lot of fee activity for the chain. Like the answer for any sector or token is no. The things that drive fees for the chain are traders who need specific access to pieces of state, who want to pay high priority fees because they see some opportunity in front of them. It's a better model than traditional exchanges, like the L1 model, in that not only are you paying on a per transaction basis, but you're also paying on a priority basis. So, like, what's going to keep traders on chains? It's going to be interesting assets to trade. So, the more deep in issuers you have, or the more like Aave and Camino and legit projects issuing their token on your chain, that's going to be the thing that's going to drive fees. So what's it's I'm not so much concerned, and regarding the meme coin thing, I'm not so much concerned with people losing money on meme coin activity and that being bad for people, because people like to lose money on a lot of things. The like one of the fastest growing industries in the United States is gambling. It's growing at, geez, like 5 times the rate of GDP, and every male in my friend group is losing money every week on DraftKings, and they're happy as a clam. They do not care. Um, so it doesn't bother me that meme coin trading is extractive. I think it's just people having fun. There is some natural cap on that activity. I don't know where it is though. If it's anything close to sports betting, I don't think we're there yet.
By the way, your friends are weird because I don't like losing money.
I don't think they like it. They think they have edge. They have
Exactly, yeah.
theoretical edge. They don't have realized edge.
Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. After 2 months of securing Jupiter, Edge has already secured $30 billion in volume and more than 60% of all Solana perps volume. Edge is comprised of 3 components: high-precision price data with an integrated risk engine, automated delivery of real-time parameter adjustments on-chain, and secure delivery of custom data points via zero-knowledge proofs. Follow and reach out to Chaos Labs on X to learn more. Thanks again to Chaos Labs for sponsoring today's episode.
What's up, guys? Fuel Ignition is finally here. Fuel Ignition is a high-performance L2 solution that aims to solve both state sustainability and performant execution as an ETH rollup. Ignition is built upon the Fuel VM and a UTXO-based asset-centric architecture with ETH-grade security. Make sure to check out the growing Fuel ecosystem by participating in Phase 2 of the Fuel Points program today. Visit fuel.network to learn more. Jose, what are some, specific sectors that you guys have been interested in?
Obviously intense, right? We published a report this week with the decentralized code guys. They're like a research newsletter in the space. It's one of my favorites. And we basically got into how we think the intense, at least cross-chain intense supply chain will play out. What different players will there be, and where we see value flowing. And yeah, like basically briefly, there will be like 3 key players. First, the front ends, where you basically go, it's like your normal dApps. Think of a Cross, Uniswap, 1inch, any front end, any DeFi front end. You go and you select what you want to do on chain. Then you have the solvers, these third party that are sophisticated actors that complete the user orders. And then the last part of the layer is the settlement network, which is the underlying infra that handles settlement. Settlement understood as intent fulfillment verification. So like the verification that the solver fronted the user on the destination chain, that happened. And also the second part is repaying the solver that fronted the capital. So they have to be repaid by the user initial capital on the deposit chain or whatever. So those are the 3 key players or 3 key layers. And then where value flows there, it's basically solvers getting commoditized and value flowing either upstream to the front ends because they hold the order flow originator power, or downstream to the settlement network because they can offer differentiated features to solvers and charge them for those features that make their life easier when solving user orders. I can go deeper into anything there if you like. Yeah, but that's pretty much the brief rundown.
Ask one question about the value side, and that's, do you think that wallets will be able to capture any value? Because to me, it makes so much sense for like Rabby to just introduce some solver network into it.
Exactly. So the way it will probably work in the future is you will have Rabbit introduce some kind of chat where like your average Joe can go on it and say, hey, I just saw this on Twitter. I want to get exposure to this, or let me know what's happening on Twitter and what's my best risk adjusted way of getting exposure to this trade or like to this yield on DeFi, whatever chain it's on, and use whatever assets I have on this wallet, whether they are on a layer 2 on ETH mainnet, and you just basically specify that to the solver on a standardized way, which is what that standard, the ERC 7683 enables, standardizing intent orders, and you enable the solver to handle all of that for you. So the future is like probably like the wallets introducing this kind of chat that parse the user orders into like an LLM, and the LLM spits out an order for the solver. Yeah.
Brick, I want to get into your thing as well, but before, last thing for Intense. My biggest fear happened to me last week, and I got slipped 8% on Intense. And that's my like big bear case for Intense is I'm getting dominated by toxic flow. Like sophisticated solver, just nobody else fills me, and this guy fills me.
That's solvable. That's solvable. And the way to solve it is you slash the solver. So you implement like even you can use eigenlayer to do that. So you have the solvers post bonds every time they want to solve in your action. And if they behave badly, like they did with you with the 8% slippage, you can just slash them and they will never do it again, at least. Yeah.
Yeah, I was gonna say like my knowledge in this vertical is pretty limited, but I guess I want to hear your take on like the wallet front of things, or like commoditizing wallets, because basically I saw kind of counter take to what you was just talking about, where the take was basically that most apps will introduce their like own wallets as well, which means that at the end of the day, like in the future, it's actually the like dApps themselves that get used that have most of the value flow even in that like vertical, because like they also own the wallet that the end user is kind of transacting on. And especially if you get into a situation where like you get dApps on your phone, or like phone usage in crypto increases more, than like you just open a certain app, let's say, I don't know, the Vertex app. You go in there and the wallet is just like, it's kind of abstracted from you, but the dApp itself like owns it.
Hmm. Yeah, so the front-end category includes both wallets or tabs. I haven't really think about what's the split between, or what's the power dynamics on dApps versus wallet, but probably still, I think the one that is closest to the user, which is the wallet, right? Even when that's abstracted away, if that's the closest thing to the user, that should hold the most amount of power on this like value flow dynamics on all of that. That will be my only take there. Yeah.
Yeah, there's this notion that being closer to the end consumer is, there's a moat there that you get to extract more value. To me, that sounds, in some senses, it's true, right? If you own the end user relationship, you should get more value from it. There's like a cost per click analysis that you could do. It's just harder to make those hops. But what about crypto makes that different? I mean, like the fact that I can like take my wallet address and just put it into another wallet and like very easily change seems to be like a much lower moat than what you see in Web 2. But I don't know. What about the nature of crypto might change that dynamic, do you guys think?
I mean, I'd want to say that the switching costs should be like exponentially lower. Also taking or like accounting for the fact that like it's just kind of quote unquote easier to become a service provider, or like the application layer itself. Like if you think about, I don't know, arbitrarily saying Amazon here, like you can just build up another Amazon like that, and then somebody goes and like can order stuff on your website. But in crypto, it's like, oh, let's say this wallet or like this perps dex is like bad, or it has too high fees or whatever, somebody else can like relatively easily spin up another similar product that should be good, and basically just like undercut the other player. But that's not really what has been happening, at least on the wallet side, right? Like in my mind, MetaMask is probably, I got no hate against MetaMask, but like one of the worst user experiences I've had. And then like I of course started out with that, switched to Rabbi, and not endorsed by Rabbi, nothing like that, but like that's the kind of EVM wallet I use. And it's just like so much better, so much better. And I actually tried to do some stuff on MetaMask a few weeks ago again, and it just reminded me of like how big the difference is. And still, like, I guess MetaMask is the biggest wallet provider by a large amount, maybe. But like, it's just mind boggling to me that it's so easy to like switch from one wallet to another, or like wallet provider to another, and still people keep using the same stuff.
Yeah, and like one example of the amount of power that MetaMask has, if you actually look, they introduced a new update feature a few months ago. It's called Smart Transactions. They did it with Mechanism Group. It's basically like an MEV protection where the MEV that gets recaptured from their users actually does not get, it's not like given back to the users. They just keep it for themselves. It's not like MEV blocker where they give it back. It's not like MEV share from Flashbots where they do give it back. It's just MetaMask activating it, and they haven't been very public about it of giving it back yet. But yeah, if you look like historically, number of transactions of Ethereum mainnet that go through the private mempool after that update go through, it went like from 20%, I think, to like 40%. So it was like pretty impactful, and yeah, still no MEV back for the ones that have it. Yeah.
About the wallets, Brick, I think you're right. MetaMask has like still relatively dominant, but is losing market share. But about this topic in general, I think this is actually one of the things that Uniswap does maybe like good for us analysts. Like they went out and built out their own wallet app so we can see if that actually impacts their fundamentals, and they're also building out their own chain so we can see if that's going to work out as well. But I think that's got to be what you track. Like, are people actually going to use the Uniswap wallet? Because how easy are they going to make it? Are they going to continue shafting people on the front end, even if it's the wallet? So that'll probably be the best way to keep track of it, as opposed to, I don't know, like who else is going to capture the value. Like you said, Ryan, I'm not really like sure how relevant wallets will be, but to me it makes a lot. Like if there was a mobile app, Moonshot, etc., and there was a wallet that was as good as that to me would be difficult to switch away from. One thing you can do is account abstraction stuff like Privy, and you can make it more difficult for people to take their keys from one service to another, but that seems a bit antithetical to keep the, like, against not your keys, not your coins.
I mean, I think that's kind of next gen crypto user though. Like, I hate that I have to be responsible for my own stuff. I want someone to blame if my assets are stolen, and I want them to have an insurance policy on that, that like can immediately top me up if they get hacked. And I'm not going to have that for myself personally. And it's very there's an established norm around not custodying your own assets, and big funds like service providers that do that. Like, I'm sure every big fund in the crypto space uses a custodian. They don't self custody, right? So I think that's the next wave, and MetaMask does have they have like some custody solution there, right? Like I think you need one for retail too. I don't know when, right? Because it's still crypto natives, but
That's one thing Sui does with ZK login. Maybe that's why they have the 2000 multiple, because they have a very good ZK login page. Brick, what about you? What sectors are you focused on?
I mean, really just on this one, aka Arbitrum. I haven't like really traded in a while. I guess I've talked about this before in the podcast, but like what I usually try to do is just like time the cycle. So like I try to buy semi early, or if there's like a big catalyst idea I think can run until the end of the cycle, I'll go into that. And then if I have like some spare time, I try to do some liquid investing. But like I'm still in TIA somewhat. I've been starting to sell on that front. Like the pump was over. So for context, I bought like pretty early after the token generation event, or whatever the right term there is, held through the massive pump, and then imagine that this narrative will continue, and now it's been at like what, $6, $5, $4 for a while, and I think it's time to start getting out of there. Sold my near bags I think a few months ago. Did some Sui farming. I actually bought in a pretty bad position, like not in this recent pump, but the pump before that. I think my average entry was something like 180 or something like that. Then I just started farming, what's it called, Aftermath. And then the market dropped, or Sui dropped like what, almost 50%. And I was like, yeah, that wasn't the best idea ever. But luckily it came back, and I was like, yeah, I'm done with this. But other than that, I haven't really like deeply looked into anything else than like outside of Arbitrum, and just like since I'm super deep working in that ecosystem, like not even investing, just looking at kind of how to make the ecosystem better, if that makes sense.
Brick, what are you doing at Arbitrum?
What I'm doing myself, or what the team is doing, or
Yeah. Want to hear more about Arbitrum and your guys' role in it?
Is Sam around?
well, yes, you want him to jump in here. uh, yeah, basically we work super closely with the DAO. As I said, like we have a exclusive contract with them, basically trying to like ideate ourselves, as well as then like gather ideas and consensus from like key stakeholders and like key thought figures and all of those people to like create proposals basically that push the ecosystem forward, as well as then like introducing new partners to the DAO itself. And I think, for example, what I've been working on for the past, I think, a month and a half is called OpCo, basically a DAO adjacent like legal entity that would have the like ability to hire service providers into the legal entity, as well as then like kind of creating an operations arm for the DAO. So you'd get more like of these operational type roles, because a lot of DAOs struggle with the fact that like you have one-off initiatives that get like started which don't play together in any way. Like there's kind of no mesh layer of information in most ecosystems or in most DAOs, and everyone's just like incentivized to push toward their own initiative. And this would kind of be a way to create uh, a unifying factor for all of those like initiatives, and basically like trying to make operations more efficient by, I don't want to use the word centralize, but like concentrate people into a structure where like ecosystem contributors more easily can like reach synergies by, for example, like sharing information more efficiently and getting like to a point where everyone's kind of working in a unified manner. Another thing we kind of floated was increasing the base fee for Arbitrum, but that was somewhat contentious, so we dropped it because it also seemed that like the new meta for L2s is just to like, pump the gas limit to infinity and like get as many transactions as possible in there. And I'll mention one more thing, and that's like we're currently trying to formalize a mission, vision, purpose for the DAO, which would then lead into another proposal, which we're calling the strategic objective setting framework, which would basically allow anyone in the DAO to propose 1 to 2 year goals for the DAO, like interim goals that would push the DAO towards its mission, vision, purpose. So trying to like kind of get everybody on the same page. And big shout out to Lido, because they kind of came up with this structure, and we've just like kind of taking that and formulated it into a format that we think suits Arbitrum pretty well.
Like Lido's Regoose?
Regoose, yeah, exactly. Or it was originally called Goose, and then because of the not LST but restaking narrative started, like they had to kind of refocus or regoose their like strategic objectives, which is why Hasu posted the regoose proposal. But that ecosystem is also interesting, or that project, because Hasu is like, of course, really well respected, really like smart guy, and he has the ability to like kind of direct the whole DAO with what he's saying. While in Arbitrum, like you got a spectrum. You have like the builders on one side, and then I guess what would be the other side? Kind of the investors whoever, and then like the builders right now kind of want to grow the ecosystem as fast as possible, don't care about like profitability, and then do that stuff later. While then like the investor side is more, I feel like, let's take it easier. I don't know, maybe they're trying to save their unlocks, or like save some juice for their unlocks in the next few years. But yeah, it's like Arbitrum is a super interesting ecosystem because like you have such a wide range of like different actors, and it's a good and a bad thing at the same time, right? Like you get a lot of different ideas, but then sometimes like consolidating everything and getting everyone on like an equal page can be pretty challenging.
I have a bunch of questions about this, but before that, I want to ask Jose, when you guys invest, do you do any activist investing, or do you get involved in DAOs, or are you mostly trying to stay out of it as much as possible and just let your analysis do the work?
I share the analysis on Twitter, so like not really activist investing in terms of like making the DAO make changes either on management or on turning on fee switch. It's mostly like sharing the thesis on Twitter, making people realize through coverage that something may be undervalued or that there is a good growth story there for a specific protocol in a vertical or whatever. But not really like like making them turning on the fee switch or yeah.
That makes sense. Brick, I have two questions, but I think the first one you're going to yap about a lot, so I'm going to ask that one later. In terms of actors and dealing with them, what's been like the toughest thing on? And I actually want to have Sam and Matt on from Entropy as well. Blockworks might get upset with me at some point about this, but I really want, because like governance is something that like I don't do. We have a governance arm, but I don't do any governance stuff. So I like, is it annoying to deal with people, especially I assume with delegates and protocols? There's a lot of conflicts of interest. You can stay diplomatic, but what's your experience been?
Thanks for giving me that permission. I mean, I think it's just an interesting set of actors you get to like be with, and it's super like it's been a super like thoughtful not thoughtful, what's the correct word I'm looking for here, like I've learned a lot from that process basically, because like you need to be able to kind of put yourself in many people's shoes, and at the end of the day, like yeah, I mean, Entropy has a delegation as well, but we're like trying to stay, or especially when we're like working on something that's going to be implemented into the DAO, like we want to stay neutral and just like take everybody's opinion into account, which can be quite hard sometimes. But it's been like a great way to basically learn how to communicate within the like crypto industry. And yeah, I've always been more of like a valuations guy. So this has definitely like made my whole skill set more robust, if that makes sense.
That makes sense. I think my last thing is, and Jose, I also want you to bring in your Unichain discussion in here. How will Arbitrum, or how do you see Arbitrum positioning itself? Because L2s, I mean, Base is dominating. Optimism has pretty good BD, which is apparently just giving out $45 million to chains to come on. But like, how do you see Arbitrum? And Jose, I guess, do you see Unichain being a competitor to Arbitrum, or is it just we're all growing Ethereum?
Well, maybe I'll start by talking about the Arbitrum stuff. And I mean, that's kind of the through the mission, vision, purpose proposal we've like made. That's one of the key things we've laid out, that like at the end of the day, Arbitrum is trying to like just scale Ethereum without compromise. And I know this is kind of something that a lot of people get like dunked on Twitter for saying like, oh, we're just scaling here. And then somebody else comes and says like, yeah, but you're taking the execution fees away from the L1. That turns out into another like fully or different conversation. But at the end of the day, that's also how I see it. Like we're just like trying to scale the L1, and I know it can lead into some like fees being missed out on basically, but I think the model there, or we're kind of working towards, makes sense, at least in my mind. What makes Arbitrum different? I'd say the DAO is probably, or like arguably, I know you could argue about this, but I think the DAO is like probably the best across, like objectively the best across L2s. So like you get a lot of support on that front. The foundation is super good, but then also like the Arbitrum's readiness to like kind of attract financial actors, like real TradFi actors, in my opinion, like sets it apart. Like that's like the main differentiator between other L2s. Like I really like Solana's, whatever the slogan is, like become the on-chain Nasdaq or something like that. And I see like Arbitrum kind of going in that like similar direction where I could see like those two kind of competing around that stuff. And we've actually onboarded a lot of like RWA providers as well recently, like real institutions. So like I guess that's also where I think like the future is going for Arbitrum. And as you said, like optimism seems to have good BD, but at least I'm not like super familiar what they're doing in the background, but at least from what I read on the internet, like it's them giving out tokens while like Arbitrum has been at least somewhat organically uh, able to like get these notable names in the ecosystem. Sorry, I that was a complete like yapping sesh, but
Brick, we're all growing Ethereum. No OP versus Arbitrum. We're all growing Ethereum, man. Yeah, my summary or my thoughts on Unichain. So I think it's two. First, it's quite difficult to quantify Unichain's impact because it will be very dependent on the amount of TVL and volume that moves there. Having said that, probably like just after launch, which should probably happen this month in a few weeks, at least they will have 200 mil daily up volume. This 200 mil is basically what Uniswap X currently has. They control that, so they can just quickly plug it on and say, "Oh, you permission market makers are gonna start solving on Unichain rather than having your liquidity on these layer twos," and because they control that order flow. So that's one. Second, rather than being zero sum or PvP versus ETH mainnet or other layer twos such as Arbitrum, I really think that their implicit strategy is like going after Solana, and more, if you want to be more crazy or more bullish, is going after thesis extraction. So my framework is that Uniswap's wants to compete with this Memecoin offering by offering like better UX, via MEV protection, lower latency, lower similar latency to Solana, and thus attract Memecoin issuance to happen on Unichain rather than on Solana. Because the most important thing here is like where these assets are being issued, right? And few reasons why I think this is: first, their Unichain's flash blocks, which reduce the sandwich possibilities and improve the UX of trading meme coins. If you guys are obviously like trading on Solana, you have to pay like 15% slippage or priority fees to get into a radium buy. That sucks. I mean, it's fine because you're searching for a 2x or 3x, so you kind of don't care. But over time, it kind of sucks. So on Unichain, that doesn't have to happen. That's the first thing. Secondly, there is this project called Doppler. It's being led by Austin Adams, not Hayden, but Austin. He's like another developer that used to work for Uniswap, and now he's still an advisor on Uniswap, but now he has his own mechanism design firm. But yeah, anyway, like Doppler is just a better pumped up fund. It improves the price discovery phase during the Mincoin launch, so you don't get snipes and you actually like get for launches, and it's built as a hook on Uni4. So there's like these two things that at the very least should attract some percentage of the Solana Mincoin issuance to happen on Unichain, and that's generally the thesis. And yeah, obviously they have also a lot of catalysts ahead, but in terms of their implicit strategy, I think that's pretty much it. And also maybe for a little bit more abstract is like unifying Ethereum through the front ends. So once like Uniswap X Crosschain Future goes live, you'll probably like just go on the front end and say, "Oh, I want to buy bread on Base, and I have ETH on this chain," and you can do cross-chain swaps without even knowing which chain your assets are living on. But yeah, that's more into the future, probably end of the year or January.
I guess something that somewhat might tie together on like a higher level Unichain and then Arbitrum is like the uniqueness of the tech stack in a way. Like, you know, Arbitrum has stylus. You can basically code in, well, I don't want to say whatever language, but like it expands on that. You get time boost. Like you're pretty much one of the L2s that's like furthest on the decentralized spectrum, or whatever L2 is calling if you've seen the pie chart thingy, and different levels of like L2. And then Unichain has I forget the right name for it, but what was it that was built with flashbots again?
The flash blocks or the uni validator set, or I think there's another name for what you're saying, but yeah, I get what you're referring to.
Ryan, do you have any hot takes about Unichain versus Arbitrum?
I mean, I think it's clearly a competition. Maybe not today, best case scenario, but yeah, that's my hottest take.
Yeah, I tend to agree.
I'd say that was a boring take. No, but
I think they'll be more challenged than people think in starting up their own chain. Like going to an island and starting your own thing is always really, really hard. They do have the brand to maybe overcome that. So I think if anyone can do it, it's probably Uniswap, but it's not going to be easy.
I do agree with, like, at the end of the day, everyone's competing for users, capital, whatever. I guess still L2 is built on utilizing like Ethereum, still in my mind like scales Ethereum itself, but it's true that like L2s probably can be seen as really like competing against each other, and like of course Interop will get better and better and better, but I think maybe in the near term what's going to happen is like I know CK Sync has these chain clusters. Optimism has the super chain standard, and like Arbitrum is working on a similar.
Orbit.
It was called chain.
Yeah. I think
Yeah.
it's called Arbitrum Orbit. It's the same cluster as OP Superchain, as Polygon CDK, as Elastic Chain from CK Sync. Yeah, all of those.
Yeah. Well, Orbit is just like the like development, or like you can have an L2 or an L3 that's an Orbit chain, but I think they call it chain clusters or something. Nah. Well, anyway, you get what I'm saying. Like you'll basically have these hubs where like within, for example, Arbitrum, you can easily move between chains, but then it might be a bit more difficult to go from like the Arbitrum ecosystem, for example, to CK Sync.
Yeah.
If that makes sense.
That's why I'm so bullish on a cross. Like, this is like a very brief thesis, but it's so the ERC that I was saying before, 7683, it's basically like this unifying glue of all of those layer 2 ecosystem clusters that you said. So when you have like a user that wants to bridge from between OP superchains from base to OP, you'll be using that ERC to get like instant, almost filling atomically transactions, and then the solver behind the scenes, they can settle through the layer 2 ecosystem cluster a specific native interop. So in terms of user experience, it probably is like cheaper when they bridge from OP to OP superchain. And if the user wants to bridge like from an ecosystem cluster from an Optimism to Arbitrum, it also provides that same level experience, maybe a little bit more expensive because it's like different clusters. But again, like from the user experience, it's just a matter of different fees. And this across architecture and this ERC is basically like this unifying glue of all of Ethereum. That's why it's also endorsed by Vitalik. And yeah, I think it's pretty cool.
I will say, I love Intense. Like before I got butt fucked by Matcha, I was like, I love Intense. I do, because I remember bridging over. I say this every 2 pods. Ryan's probably sick of hearing this, but like before, I remember bridging using Wormhole to Solana, and it's like you got to go on the Discord and say, "Please, can I have my money back?" And now e-bridges just the easiest thing, and so is Across. Consistently cheap, consistently quick. I don't know. I'm very happy. So I agree with that thesis a lot. If there is going to be some goofy multi-chain world, and we're not all on Solana, which is Brick's nightmare probably. That's the Blockworks research
don't
brand,
say
by
that.
the way. Yeah, I think that's it. Ryan, do you have anything else you want to say, or shall I wrap it up?
I'm good, guys. This was a lot of fun. Should do it again.
We should. Brick, Jose, thanks for coming on. Do you guys want to give out your Twitters? And Brick, maybe you can give out the Entropy Twitter as well, so that our listeners.
Yeah,
can
for sure. I'm OX___break on Twitter. Yes, I need to change that. And you can find Entropy Advisors on Twitter, just Entropy Advisors.
Fantastic. Jose, what about you?
And for myself, I'm Tumilett, as it sounds, and yes, another T at the end. So Tumilett and another T. Pretty easy.
Fantastic. Yeah, guys, thanks for coming on. This was a lot of fun.
Thanks for having us.